up, you guys? Welcome back to my channel. If you are new here, what is going on? My name is Nikki, and it would mean the world to me if you would consider subscribing to this channel by hitting the NB in the bottom corner or the red subscribe button and join the crew. With that being said, today is a beautiful, joyful, glorious, blessed kind of day, but you already know the drill with that. You guys, today is going to be a little bit different than what I normally do, although I have done some like DoorDash videos in the past. Essentially, I was doing DoorDash to just make a little bit extra money. I am very into finance and making money and investments and just kind of like financial education, which is something that if you've been following me for a while, you might not know, but I was doing DoorDash in order to make enough income to not only help with some bills sometimes, but also to invest it. Today is the first of maybe a few videos about investing, my investment journey. I love to, read about stocks. I'm talking about investing in the stock market, track stocks, research them, follow up with the news, follow the market. And so I'm kind of taking my DoorDash side hustle and maybe replacing that with a little bit of investment strategy, investment videos, investment type things in the stock market. I did ask in a previous video if anybody out there would be interested in that. I did receive a few comments saying you would be, so I thought, why not make a video, go over my portfolio. I do currently have 3 brokerages that I place money into. There's really only one that's like my big one. Even though it's not really a big account. That is my Robinhood portfolio, so I do use Robinhood. I also have an account open on M1 Finance that I use for my Roth IRA for more of a retirement type investment. And then my third one, I just actually today set up, and that is through TD Ameritrade. It's going to be the Thinkorswim trading platform. I'm trying to use this quarantine and being out of work as an opportunity to research and learn more about option trading, day trading, just the training aspect of investment. I am and always will be a long-term dividend investor. That is something that I really, really enjoy. But with that being said, I do just enjoy everything investing. And so I am taking this opportunity to research, learn, build my database, build my knowledge, which I recommend everybody out there does. Find what best fits them, best suits them. And you guys, I think this goes without saying, but I am nowhere near a professional at this. This is not financial advice. You should not copy what I'm doing whatsoever at all, because quite honestly, I don't know what I'm doing. I mean, I kind of know what I'm doing, but I'm not like, really, really good at it. I've just started. I'll get into all that, but you guys, this is my Robinhood portfolio. Let's just get into this video. Alright, you guys, so like I say, I use Robinhood as my main platform, my main brokerage for my dividend portfolio. And as you can see on the screen right now, it's sitting at about $4,091. That might change just a little bit. We have like some after hours trading going on here. But as you know, the last month and a half, the stock market has been hitting lows of lows and coming up within 1 or 2 days for the highest we've seen, going back down. It's been extremely crazy. It's been nuts. But I am currently sitting at $4,091. But as you can see, the last week I'm only up $275, which is about 7.21%. I am down currently the 1 month mark at $594, 12.67%. 3 month mark I am down 16.62% at $815. The 1 year I am down $812, or the same as 16.56%. And all time I am down $817.16, also known as 16.65%. Now, that really is where I'm at currently with this. I did begin this whole thing in December. I think it was like, yeah, so about mid-December on like the 16th, 17th of December 2019. So I got in when the market was trading at insane highs. And, thankfully, actually, it was kind of a decent time for me to get in. I got in, got some positions, and then, unfortunately, because the current situation, our economy, our market, our world is in, the stock market is suffering, and it's suffering a lot. There's been, certain sectors like oil, gas, stuff like that, going down, energy, going down 40%, 30, 40, some at 50%. It's been insane. And to be honest with you, luckily, I am at a point where I've put a decent amount of my money into it when things were falling. I never try to predict it. I never try to figure out like, oh, this is the bottom, this is top, this is gonna go down further. I just, as a long-term dividend investor, I just continue consistently and consecutively putting cash when I can into this account, just trying to diversify, get the best returns possible, making sure the dividend is strong. A dividend essentially is a percent, a little piece of the pie of that certain company that you now invest in, gives you back a little bit of their profit. So it's just a little bit of extra money, money that you're getting passively, which is why long-term dividend investing is so cool, because at some point you will be able to hopefully live off those dividends if you wish to do so. At this point currently, I'm nowhere near being able to really even pay anything with these dividends, but at that point what I do is I just reinvest them back into the stock market. Okay guys, so let's just get into the first stock here. So the first stock and company that I've invested in is called AgeX. It's a biotech company, so this kind of goes against what I was talking about being a long-term dividend investor, but since I am young enough, I do think that throwing a little bit of money into something that I think is cool and might have the opportunity to grow through the course of my investing life, why not? You know, when you're young, you should take a little bit more risk than just playing it totally safe. So I honestly grabbed this company when I think it was like the first week I opened this account, and my dad was like, you're young, you should take, you know, chances. What if you take a chance on a super cheap traded stock right now and it blows up in the next 40 years, blah, blah, blah. So I'm like, all right, you know, that's cool. So as you can see, I have 40 shares of this at an average cost of $1.37. I'm currently down 32.12% overall on this baby. I am up 13% today, which whatever. But yeah, this doesn't pay a dividend. Honestly, you can't even find a balance sheet. You can't find statements for this. It's so brand new. It's not profitable. I don't honestly logically know why I put money into this when there, you know, were other things I could do, but it is pretty cool. I do have my bachelor's of science, so I am pretty into like science and technology and things like that. And so this company is focusing on the development and commercialization of therapeutics targeting the human aging. So I thought, whoa, like that could be super cool if they find something that could like not alter it, but I don't know, maybe alter it. That could be worth a lot of money. I don't know. Logically in my brain, that sounds like a liability waiting to happen, to be honest with you. But yeah, this one wasn't the best first example, but I did put some money into this because I figured I'm young enough. You got to take a couple risks. And if I end up losing $50, whatever, I would lose that buying in half a pair of shoes. Whatever. Next stock I have here is honestly another one that was a little bit of a downer, because when all of this started to first tank in like, I don't know, was it like end of February or something like that? It had started to drop here. Let me see if I can find it. Like it was like right here at this point, and it was like dropping, and it came down to like 60, yeah, it came down to like 66 bucks or something like that. And I was like, oh, okay, it's down like 12%. I'll put a little bit of money in there. We'll see what happens. I don't have anything in the energy sector yet with like natural gas or anything like that, so I figured, you know what, we're gonna give it a roll. I bought like, I think I bought like 4 shares at like 66 bucks or something like that, and then literally, as you can see here, like within a few days it dropped an insane amount, almost 50% from where it was, like down in the 30s, the upper 30s. And I was like, oh god. That's why I have so many shares of this, because I have been trying to dollar cost average my way down, which is a little scary, especially in this given sector, just because it is struggling so much. Like it's down to 20 bucks now. Like it's crazy. It's down almost 75% in the last 3 months. That's disgusting. They do have a dividend now that is 17.22, which I wouldn't invest in if anything's over like 7. I think it's a little fishy, but I got into it too early. That's another little rookie mistake here, but you live and you learn. But I do have 15 shares, which is weird because this is my biggest holding in my portfolio at 7.4%. I average cost at 36.25. It's not great. It's not great, but it does pay dividend. I do have gold, so I do get to kind of look at what's going on here. I do think, because of the size of this company, I do think the history of this company, it will be fine through this. I think it'll come back. A lot of people are afraid and do not recommend investing in gas and natural gas and things like that, just because of like electricity and the way that the market's moving towards more electric vehicles like Tesla and all that stuff. But I think about like trains, shipment, you know, cargo ships, airplanes, stuff like that. Like we are a long way before all of that is electric, so I feel as though this still is a pretty safe bet. I'm gonna just let it ride. I'm not gonna be adding any more money into this. There's other companies I'd rather get into. I think 15 shares is a decent amount for me right now, especially because I am down overall 241 bucks basically, which is 44%. Today, I mean, freaking down 3.5%. So this is just another dividend move. I know that they are pretty consistent. I think they've paid their dividends like at least the last 40 years, something like that. And especially now, times like they are, companies and good dividend companies are cutting dividends just because the times are so hard. So they're cutting dividends. Haven't heard of this one yet. That could change literally tomorrow, but this is another holding that I have in my portfolio. Moving on, new residential investment, tickers NRZ. I have 15 shares of this at an average cost of $12.09. This is a real estate REIT, so that means it's basically investing in real estate without having my own actual properties. Long story short, I am down almost 50% overall. I am down 8%, about $8 today, but this one again is at a 29% dividend. When I first got into it, it was really at like a 9 or 10, I want to say, so that's a little scary, but you know what, we're gonna ride it out. This is a company that I have researched their balance statement, their cash flow, stuff like that. They do have a good amount of cash on deck, so I'm not super concerned quite yet. The next biggest holding I have in terms of shares is Peloton. Now, if you know me, you know I love Peloton. I don't have a Peloton bike, I do have just a regular spin bike. I have the Peloton app. I put my computer on the bike and I work out every morning. I'm a huge fan of Peloton. I absolutely love it. I believe in it wholeheartedly. This is another company that is not specifically dividend. I'm looking at it more for a growth aspect with my age and the risk factor tolerance that I do have. I just completely believe in this. I love it so much. As you can see here, I mean, they're pretty brand new to being publicly traded. They're not even a year. I'm really not concerned. They are up 6.6% today, $1.72. I do have 11 shares at an average cost of $27.66. Today's return, I am up $20.46 or 7.16%. My total return on this company is $1.97 at 0.65%. Like I said, they don't pay a dividend, but I'm just a firm believer in this company. That's what investing is about too, you guys. You got to find companies that you just love, you want to be a part of. And this, for me, definitely is one of them. I did average down on this a lot. I think in the beginning, I had it around $31 or something for like a few shares. That was my average cost. So I have dollar down on this. It did hit some lows here, as you can see in the last 3 months. Pretty volatile. I mean, especially with the 1-year chart, you can see that. But like I said, it's pretty brand new. I'm not too concerned, and I'm looking forward to seeing where this goes, and I'm gonna keep putting money into Peloton for sure. All right, you guys, so the next one that I have here is Cisco. It's an internet technology communication protocol type software. Huge fan of the technology, as you may know. So I do currently have 7 shares and an average cost of $44.53 a share. I am looking to get my cost down on this. It's not too bad though, actually. I mean, I'm up $10 today. I'm up 3.7%, but I am overall down about $30 at 9.6%. This does pay a dividend. I have received a payment from them already. Let's go ahead and look at that. Let's see what that looks like. I believe that was right here. So yeah, on January 22nd, I received a $1.75, 5 shares at the time. So the next time they pay me, which they pay quarterly, I will get 35 cents a share. So that's 7 shares I'll have then. Yeah, I just really believe in Cisco. I believe in anything really technology, cloud-based communications, computers, internet, stuff like that. I will definitely be holding this long-term and investing more to Cisco. The next one that I want to talk about is Comcast here. So Comcast is a media entertainment communication company. I did expect, you know, Comcast to take a really big hit when they did announce that they were going to postpone the Olympics, but all in all, with everything else going around, it didn't take that big of a drop. I mean, extra, aside from what's going on in the market with just everything right now. I am happy with my position in Comcast. I would like to average down a little bit. I do have 6 shares and an average cost of $44.80 a share. I am up $4 today at 2.05%, but I am overall down about $57 at 21%. They do pay 2.66% dividend. I have received a dividend from them already. And you guys, when I'm looking at these companies, because not only do I recommend investing in companies that you do your research on, but you need to be a consumer, you need to understand the business plan, you need to understand that company, believe in the leaders of that company, the management of that company, and if you do and you're comfortable, then put your money there. I like to tell people to look at the 1-year and 5-year. I personally rather look at the 5-year just because it gives me a more long scope. Because I am long term, I need to know what this is doing long term, and this is as long as I can get on the app itself. So I am looking here. You can see Comcast does take that upward trend. We do have dips right here, right there, but as a long-term investor, you see those dips as great buying in opportunities. So it does have an upward trend overall, and it still is currently up about 26% in the last 5 years. So that's a good sign, you guys. I have no problems with Comcast, and I will be adding more to my portfolio. So the next company I have in here is one that I believe you'll probably find in a lot of dividend investors' portfolio. That is AT&T. I do currently have 6 shares and an average cost of $37.76. I am up $1.70 about today, about almost 1%. Overall, I am down about $46 at 20.23%. They do pay a dividend of 6.97, which, you guys, this company is very solid. You're not gonna go wrong putting your money in here. They've been paying their dividends for, they might be, I believe they are a dividend aristocrat. I'm gonna have to double check my facts on that, but I'm pretty sure they are. But they've been paying for years and years and years. I just feel like this is a great place to be putting money. It doesn't have as much growth. Like I said, the 5-year, it really doesn't. I mean, it popped up right here, but see the this downward trend's a little spooky. This was a good sign, but now we're back down here again. It's a little bit, you know, not consistent. The last year has been pretty decent, but the last 5 years a little bumpy. But like I said, with that dividend, you know, that's pretty juicy, and I don't mind taking passive income from a company that's gonna pay me, even if they're not growing that much. I'm really looking forward to adding more AT&T to my portfolio. It does currently only take up about 4.4% of my portfolio. I'm gonna look down to average down here pretty soon and to continue to grow that position in the long term. All right, you guys, so the next company here is Biohaven Pharmaceutical. Now, this is a pharmaceutical company that I invested in. It was like the first week I opened my account. I was watching Kramer, you know, Kramerica on Mad Money. I was listening to him. He was talking to, I believe, the CEO of this company, but he was a firm believer in this and told us all to buy it, and I didn't know much, and I knew Jim Cramer knew a lot, so I was like, you know what, Krames, I'm gonna listen to you. So I went ahead and listened to him. I bought 4 shares at an average cost of $53.08. It has since tanked. I am down about $8.50 today at 6%. Overall, I'm down about 80 bucks at 37.55%, which is kind of gross. I should be averaging down on this. I do believe this is a company that I might want to hold on to. As you can see, their 5-year overall has been on the upward, so I'm not too concerned. I do not currently pay dividends, so like I said, that's just another one that I'm kind of taking a risk on. Their big thing is trying to find pharmaceuticals and drugs that are going to help the neurological aspect of diseases and stuff like that, and that's very interesting. And this was just a Kramer call, to be honest with you, when I first opened up my account, so I just went for it. All right, so now we're going to be getting into some pretty known stuff here. So this is Target. I do have Target currently. I have 3 shares of Target at $104.47 a share of an average cost. I am up $3.78 today at 1.33%. I am overall down $25.42, about 8%. They do pay 2.79% dividend right now. I think Target's actually a company that might be able, if they can get things together, give Amazon a little bit of a ride for the money. I mean, they're doing the curbside pickup drop-off thing. They're doing the delivery thing. I love their marketing. I mean, you always see people talking about how they go into Target for 5 things and then leave with $500 worth of stuff. I mean, Target is just, I don't know. I'm a Target girl, I'm not a Walmart girl. That's why I don't invest in Walmart. I would rather invest my money in Target. So I believe in this company. I believe in the long term of this company. As we can look at here, the 5-year, I mean, it's kind of taken off here. It's been a little, I mean, it's shot up, shot down, shot up, shot down, but overall, I'm not mad at it. I think long term, this is going to be an awesome play for me. I think I was able to get it at an okay price. I think I'd rather have it in the 90s, but I'm not mad about it. I do enjoy Target. This is a long-term play for me. I will be consistently putting my money into Target for sure. I think it's going to give a lot of things a run for the money. A lot of other consumer staple, consumer good, discretionary type businesses could be in trouble, but I think Target, with what it's at, what it's doing, the branding and all that stuff, like I said, I think it's gonna be all right. The next position that I currently have is in American Express. I do have 3 shares and an average cost of $94.07. I am up $6.60 at 2.48% today. I am down about $9.41, which is 3.33%. They do pay dividend 1.94%. Look, the reason I got into American Express is because I'm a consumer of their goods. I do have credit cards that are American Express. I needed to get diversified into the financials through other research and things. I mean, Warren Buffett, one of his highest holdings is in American Express, so I feel as though if it's good enough for the buff, good enough for me. And I just enjoy American Express. I think they have a lot of good perks, benefits to their credit cards, things like that. They have other options. I believe here, if I'm looking at the 5-year chart, as we can see clearly, I mean, this has been consistently going up. I can't be mad at that. Yeah, I mean, this is a company as well that I will be putting a lot more money into. I do believe in it. I do like American Express, which goes into my next financial, which is Bank of America. Again, Buffett has a very strong holding in Bank of America. I recently just got into this one, actually. I do have 3 shares at $21.24 a share. I am up $1.35, about 2.08% today alone. Total, I'm only up $2.42, 3.8%. Like I said, I just added this. They do pay a dividend at 3.33%. I know a lot of people saying financials and banks and stuff like that are gonna have a hard time. I think it's gonna be okay. I think it's all gonna be okay. Bank of America does have a very good history of paying their dividends out. As you can see here on the 5-year, I always look at that too, because not only do I want dividends, but I would like some growth. Bank of America does show me that a little bit right there, so I'm not mad about this. This is a position that I will continue to add into. I am happy I was able to get it at that 21 mark. I mean, as you can see here, in the beginning of this year, it was up in the mid 30s, so I'm already hopefully going to be making a profit once we get back to normal and world gets back to where it should be, but I will be adding more into this as soon as I can. The next one after that, obviously, you guys, Apple. I'm a huge Apple fangirl. Apple's a very solid company. The 5-year, you can see, very big on growth. Not so much so great on the dividends, 1.24%, which is like whatever. But I'm here mostly for the growth of Apple and to say I own part of Apple. which is pretty sick. So as you can see, guys, I have 2 shares and an average cost of $308.90. I am up $13 today at 2.6%, but I am overall down almost $110 at about almost 18%. I do want to get something a little bit low here. This has to drop a little bit more for me to want to buy it right now. I could definitely use that $250 for like bills because I don't work right now, so I'm trying to hold off. But if this dropped, I would have to consider maybe pulling some out of my savings to take advantage of that. But I'm cool sitting where I'm sitting right now. Like I said, long term doesn't really matter, like penny for penny where you're at, just because you will consistently be putting money into it, so it's gonna raise your dollar cost. So it doesn't really matter. You drop it down when you can, and you just continue to invest down the road. The next one after that is Kellogg. So I do have two shares of Kellogg's at $66.54 a share. I am up almost $3 today at 2.4%. I am down about 11 and a quarter, 8.45% overall. I look at the 5-year. This one's not great, but their dividends are 3.83, so I kind of like that. Kellogg is a national, I mean, you know Kellogg. I like Special K, Rice Krispies, Pop-Tarts, Lego My Eggo. I mean, I believe in these things. I've been a consumer of these goods, and I'm not too concerned. I think long term they're going to be just fine, so that is why I do continue to have them. So the next one I have is JP Morgan Chase, another financial. I do have 2 shares and an average cost of $91.90. I am up $4.34 today at 2.38%. I am up about $2.80 total, 1.5%. I just added this pretty recent. Another 5-year, they're up, they're looking good. I really like that. You guys, they do pay 3.95% dividend, which I do really like. They're one of the most secure financials, I think. I do have like my auto loan through that, so I do bank with them. I believe in JP Morgan. I mean, I also bank with Wells Fargo, but that I don't like what Wells Fargo looks like. I like what JP Morgan looks like, so I'm gonna grab that. You gotta go within your gut. You gotta go with what you think is gonna be best for you. You gotta do your own research, but for me, JP Morgan is a long-term hold. Damn, you don't realize how many stocks you have till you go through them. Okay, the next one is Microsoft. I do want to buy more Microsoft, but I'm not in a hurry. I do have one position at 167.14. I'm up $12.40 today at 8.28%. I am down $5 pretty much overall. They do pay a dividend of 1.36%, but I'm not really concerned about that. I'm more long-term on them, more bullish. I mean, look at that 5-year. That is something I need to be a part of right there. That needs to continue, and I want to be a part of it. So I will definitely be investing more in Microsoft as time goes on. The next one is AbbVie. It's a healthcare. I mean, it's a good dividend right there at 6.5%. I do only have one at 84.95, so I got in. You know, it's definitely lower than that now, but I'll probably be adding to this as well. As long as it stays under there, I'll probably add another one within the next month. But I am up $2.34 today. This is long term, like I said. Not too worried about them. The next one I have here is Pepsi. So I have Coke and I have Pepsi, and I'm a believer in both of them. I don't think you have to pick a team. I like them both. So I do have Pepsi. If you look at the 5-year, Pepsi obviously growing. I don't know why I like Pepsi stock so much more than Coke stock. They offer so many products, and there's brands, and I mean, it's a good company, and I definitely want more. I just don't have enough money to buy more, and if I did have all the money in the world, I'd definitely buy a few more of these. I do currently have one share at $113.50. I am up about $4.50 today at 3.77%. I am up overall $11.50 at 10%, which is kind of nice, but I'll be adding more, so it doesn't really matter. They do pay 3.17% dividend. You guys know Pepsi. I don't need to go too much into detail with Pepsi, but highly recommend Pepsi. Love Pepsi. Their sheets look good. Cash looks good. They're gonna make it through this time. I'm not too concerned. So one that I actually just added today was CVS. I've been wanting to get into CVS for a while. I went ahead and added one share of $58.20, so I am up $1.50 basically today. I look at the 5-year. Now this one's a little against what I'm saying here. The 5-year is not great. It's got a pretty bad downward trend, but they do pay a 3.41% dividend, which I do like. They are one of the largest companies there in that sector. They do have a history of paying their dividends out. I personally receive my pharmaceuticals through CVS pharmacies. I shop at CVS pharmacies. I use CVS. I am a consumer of that good. I believe in what they're doing. I think they can really turn it up, and I'm gonna hold on to see what happens with them. Yes, I will be adding more CVS to my portfolio, and that's that. So the next few holdings and positions I'm getting to are ETFs. So they're not essentially a, individual stock, an individual company. They're ETFs, which means they have a group of companies within that stock that is extremely diversified. So when you first start out, honestly, a lot of people recommend just really getting into ETFs because it is so diversified, but when you get into them, I guess. But they are a little bit more like less risk. They follow the S&P 500. They follow the market. So pretty much whatever the market does is pretty much what you're gonna average in those ETFs specifically. If we look here, I do have SPYG, which is a SPDR portfolio S&P 500. It's a growth EFT. So this one tracks large cap growth stocks for me. So as you can see in the 5-year, I mean, it's just the whole point of this is to grow. So it's growing. I do have 4 shares at $43.14. I am at $5.16 today, about 3.7%. I'm down $27.50 overall, almost 16%, which would be a good opportunity for me to buy into this. But like I said, it's a long term, and I gotta kind of get that through my head because I want to throw all my money at these opportunities, but I gotta chill. So this does pay a dividend of 1.68%, which is cool, but I'm not really in this for the dividend. Like it says in the title, I'm here for the growth. The next one is a S&P 500 high dividend ETF. So this is following companies with dividends. The 5-year here, I mean, slight growth until obviously right now. This would be one that I would probably want a dollar cost down because it is the one that I'm, you know, lowest in overall return. But I am up $2.52 today, down about $51 overall. But this is just a long-term play. I will consistently be putting money into these ETFs like all the time. The next one is S&P 500 value ETF. So it's like a mix of both. It does pay a 3.25% dividend, which is pretty good. So I don't mind that at all. And you'll see the growth here with a pretty decent dividend. That's why I want that, with the low risk following the market. So I do have 4 shares at $32.74. Today's return is almost $3. My total return, I'm down about $25.66, about 19, almost 20%, so that's not ideal. But I will be adding more into this. I'm not worried. The next one is one that I have seen in a lot of dividend investor portfolios. That is S&P 500 high dividend, low volatility, which means essentially it's high dividends without a lot of this. As you can see here, the 5-year, slight low growth, some dips right here. Obviously, huge dip right now, but I do only have 2 shares of this. I think I ran out of money when I got to this one, so I have 2 shares of this at $34.42. I'm up almost $2 today at 3.16%. Overall, I'm down around $7 and about 10%. But this one is the highest dividend at 6.12%, and this one actually does pay a monthly dividend, so you do see that monthly. A lot of the companies that I hold, I think, besides this one and one other, are quarterly paying dividend stocks. But I have a pending dividend right here, obviously, of 16 cents. At the time I had 1 share, so I will be getting that at the end of this month. That's that position. I will definitely be adding a lot more to this one. Okay, so the very last 2 that I have on here is actually GoPro. This was a free stock that I was given for signing up. So I'm actually gonna sell this once it goes back up to like the $3 or $4 mark that it was at. I'm just gonna sell it and invest in something I want to, but I will put a link down, which is an affiliate link that if you do sign up, you get a free stock, I get a free stock, but I'm just gonna sell this. And then this one right here is the same thing, Orchard Island Capital. It was a free stock I was given because someone used my link, but specifically this one actually pays a monthly dividend. So I do get 8 cents every month. So I might just hold this one just because, hey, I'll take the 8 cents. That's cool. And I just reinvest that 8 cents into other companies, obviously. But you guys, all in all, look at that. We up after hours too, okay. But all in all, you guys, I mean, that is a pretty... There are a lot of stocks. There's a lot of stocks in there, a lot of companies in there. I will continue to add to what I have. I do have a few companies that I want to get into my portfolio, but for right now, I'm pretty happy with where I'm at. This is my Robinhood portfolio as of March of 2020. It's been a little rough the last, you know, obviously 3 months, really. And here's the thing, I really don't expect these to be going up that much anytime soon. I do think that this whole situation that we're in is going to be around for a while. Not necessarily the thing itself, but the repercussions of what it's doing to our economy is going to hang around for probably the rest of 2020. So I think this year would be a really great idea if you're thinking about getting into stocks, if you're thinking about investing, to start doing it just because of the current situation we're in and the opportunities I think it presents. If you enjoyed this video, if you made it to the end of the video, you are the real MVP. Come here, you know I love you. You guys, if you have any questions for me, any recommendations, any ideas for these videos for investing, please leave them down below. Let me know. Hit that like button. You guys, subscribe to the channel. And like I say at the end of every single one of my videos, enjoy your journey, whatever your journey is. And always remember to do what sets your hearts on fire. And I will catch you guys in my next video. Bye, guys.